Hi, this is Karen, your nonprofit finance guide, and today I'm going to talk about 3 ways to tell if your balance sheet or statement of financial positions, if you're a nonprofit, how to tell if that is wrong. Okay, so 3 ways. So let's get to it. Okay, so I pulled up a balance sheet, and this is just a sample company from QuickBooks, Craig's Design and Landscaping. But the first way you tell if your balance sheet is correct is if your assets equal your liability plus your equity. That's that's the most basic basic principle right there. Your total assets must equal your liabilities, your total liabilities, and total equities. So in this case, it is 24,336, and you'll see 24,336. Okay, that's the first way. Second way to tell if your balance sheet is correct or not is if you scroll down to the bottom of your balance sheet and you want to look for this net income amount. Okay, this net income amount should tie back to the net income amount on your profit and loss statement. So let's pull up the profit and loss statement. Okay, 1,696.45 on our profit and loss, 1,696.45. Now what you're going to want to do, you're going to want to make sure when you're pulling up your profit and loss and comparing it to your balance sheet, you want to do, it's best to do a year to date. So in this case, you see I do have January through September, and on the balance sheet I have as of September 30th. Okay, so you just want to make sure you're pulling up the right dates to make sure the net income amounts tie out. And then third way to tell if your balance sheet is correct is having each of your accounts reconciled. So when it comes to your bank accounts, you should be able to pull up your bank reconciliation and your bank statement and make sure your cash balances tie out. With accounts receivable, you should be able to pull up an accounts receivable report in your accounting software and make sure and confirm that the report you've pulled up in your software ties to this number here. Along with your inventory, you should understand what's in your undeposited funds. Each of these amounts should reconcile to a report, a statement, or you should at least have some type of understanding of what the balance is. Okay. In this case, loan payable, $4,000. Somewhere there should be a description as to what that loan is for, who it's payable to. You should have all that detail along with notes payable. Now, if you don't have the detail to your balance sheet accounts and you're not sure where the amount is coming from, you probably need to take it off the balance sheet. Have your accountant create a journal entry to remove it from the balance sheet, because your balance sheet is the part of the financial statements that needs to be correct. If your balance sheet is correct, then all of your other financial statements are correct, because the balance sheet shows where you are or where your company is at a particular point in time. And if you have amounts on your balance sheet and you have no idea what it's for, again, ask your accountant or remove it from your balance sheet so your balance sheet can be accurate. I have looked at a number of balance sheets and have asked, hey, what is this account? And nobody knows. And upon further research, that amount, that balance, it just sits there. Or it had been sitting there for years and years, and everybody has just forgotten what it was for. Okay, so those are the three ways to tell if your balance sheet is right or wrong. Again, first, your assets don't equal your liability plus your equity. Two, your net income on your balance sheet don't tie back to the net income on your profit and loss statement. And three, ensuring that all amounts on your balance sheet ties to some type of reconciliation report or there's some type of description. Okay, so let me know what you all think. If you're watching via YouTube, make sure you like, comment, and subscribe. Thank you for watching and have a great day.